Turning now to Apple, it hit a record high recently, but the stock has lagged much of the year compared to Mag 7 peers. So, will it break out or lag again in 2026? Let's ask Craig Moffett from MoffettNathanson. Craig, isn't what really matters here if Apple comes out with Apple Intelligence this time and if it delivers as expected?
Hey, John, I'm not sure about that, actually. It lagged for a lot of reasons during 2025, but there were a lot of risks in the stock. We opened the year, actually. I remember you had me on back in January. We had a sell rating on it. It's not a sell anymore. It's sort of neutral. It's a fairly valued stock, I think. But I think looking at it going forward, I think the big question is really about services. I don't think we're going to get the kind of giant super cycle of iPhones that we once thought we were going to get maybe 18 months ago when they came out of the WWDC and everybody thought that AI was going to make you upgrade your device to a more capable device. I don't think that narrative is really what's relevant to the stock anymore. I think people have come to terms with the fact that that's probably not likely. So instead, you're looking at a company that is really, really good at what it does. It's a relatively expensive stock. And the swing factor might actually just be services and the general growth of the services revenue for the business going forward, more than it is actually on hardware or specifically on AI.
Let me throw another idea at you. Apple has not been spending nearly as much as a percentage of revenue on AI infrastructure as any of the other names in big tech, arguably because they don't have to, but I guess you could come down a lot of different ways there. Since we're talking about potential performance in 26 relative to peers, doesn't some of that depend on how optimistic investors remain about the potential return and how soon on all of that AI infrastructure investment?
You're dead right, John. In fact, I'll say it even more bluntly. Apple is seen as the safe choice. So the biggest determinant of what Apple's relative performance is going to be is not how well Apple does, it's how well the rest of the Mag 7 does. In a big rally or continued rally for AI, Apple is going to underperform. In a pullback, Apple is going to be, I would suspect, by far the best defensive of the Mag 7. So it is rightly seen, I think, as the safety choice of the mega caps because it's not capital intensive and not really dependent on the AI story so much.
So let me put a spin on that then. If the rest of the big tech players continue to do well because there's AI optimism, aren't people going to have to access those AI-driven services on something like, I don't know, iPhones?
Sure. The question is, so let's parse the AI opportunity for Apple a little bit more finely, right? When they came out of the WWDC 18 months ago, the assumption was that everything Apple was going to do was going to be on the device. And by virtue of doing it on the device, you were going to need more memory. You were going to need a neural processor in the device. That meant that the bulk of legacy phones weren't capable of doing AI. And so there was going to be a big upgrade cycle and so on. We're now looking at a future where it's much more likely that you're going to be doing that processing in the cloud, which, by the way, is what ChatGPT does. It's what Claude does at Anthropic. It's what Gemini does. So Apple was going to be the outlier anyway, and Apple's looking like less of an outlier. It looks like more of that will be done in the cloud. Okay. That's fine. It'll work well, and you'll be doing it on your device. But it's not clear that that actually generates any incremental revenue or anything like an iPhone cycle, because you could do that today. You don't need any particular new capabilities in your phone in order to do that.